Okay. Yes, people, good morning to all of you. Sir, very good morning. Today is the fifth class of pgbp, Profit and Gains of Business and Profession का fifth class आज. तो kindly read carefully the illustration. Last class we have already discussed up to additional depreciation. Okay. So now we will discuss some practical problems of additional depreciation, capital gain in case of sale or transfer of a depreciable asset. Okay. So kindly read the illustration. C Limited, a manufacturing concern working since last 20 years. The block is the block of a plant. The applicable rate of depreciation is 15%. Has WDV as on 1st April 2021 10 lakh. Subsequently, it purchased the following plants: Plant A, Plant B, Plant C. The acquisition date is 7th April 2021, 7th December 2021 and 5th May 2022. Cost of acquisition are 6 lakh, 2 lakh, 2 lakh 50. Rate of depreciation is 15%. It means plant A, B, C, there is also another plant D, which I purchased on 6th December 2021. The cost of acquisition is 1 lakh and the applicable rate of depreciation is 15%. So these plant belongs to the existing block. Yes or no? Yes sir. Why? Because the depreciation of existing block is 15% and the depreciation of acquired asset, the assets are being planned. It means same class of asset in respect of which same depreciation is charged, yani 15%. So plant A, B, C and D belongs to the existing block. Plant B installed on 7th May 2022. Can you tell me on which date plant B was acquired? The plant B was acquired on 7th December 2021, but it is installed on 7th May 2022. Compute additional depreciation. You can check the answer also. Plant A, 7th April 2021. The cost of acquisition is 6 lakh. 20% of original cost can be claimed as additional depreciation. So additional depreciation is 20% of 6 lakh. That is 1 lakh to 20,000. It can be claimed in assessment year 23-24. The plant was acquired in 21-22 previous year. So 21-22 previous year means 22-23 assessment year. Plant B acquired 7th December 2021, but it is installed 7th May 2022. Kindly rectify the date. The plant A is acquired 7th April 21. It means assessment year, year of acquisition is 21-22 So depreciation will be claimed in 22-23. Plant B is acquired in the year 21-22. Plant B is acquired in the year 21-22. But plant B is installed in 22-23. So depreciation can be claimed in 23-24 assessment year. Plant C is acquired in 22-23. So depreciation can be claimed in the previous assessment year 23-24. The depreciation is 20% on original cost. The rate of the amount of additional depreciation is 20% on original cost. So plant A, the original cost is 6 lakh. So additional depreciation is 20% of 6 lakh, 1,20,000, and the additional depreciation can be claimed in the assessment year 22-23. The plant B, although acquired in 21-22, plant B, although acquired in 21-22, but plant B is installed in 22-23. So depreciation can be claimed in the previous year 23-24. Amount is 2 lakh into 20%, 40,000. Plant C acquired in 21-22. So depreciation can be claimed in previous assessment year 22-23. Plant D, acquired in 21-22. But less than 180 days in 21-22, put to use for less than 180 days in 21-22. Sir, how? From 6th December to 31st March, it is not 180 days. So in 21-22, plant D put to use for less than 180 days. So plant D put to use for less than 180 days in 21-22. So 10% additional depreciation at the rate of 10% can be claimed in 22-23, and balance 10% can be claimed in 23-24. So 10,000, so 1 lakh into 10%, 10,000 in assessment year 22-23 and 10,000 in assessment year 23-24. The next concept is terminal depreciation and balancing charges. This provision is applicable only for power sector units. So this provision is applicable to associate engaged in generation and distribution of power. You know that for associate engaged in generation and distribution of power, the applicable there was two options for claiming depreciation. One is they can choose SLM or they can choose normal method, that is WDV. So this section is applicable only if the assessee is engaged, sorry, only if the assessee is choose SLM, straight line method depreciation. In other words, if the assessee engaged in generation and distribution of a power choose WDV method of depreciation, then this section is not applicable to them. Is it clear to all of you? Condition: assessee must follow straight line method of depreciation at specified rate. Already I discussed this point. The asset is sold, discarded, demolished, destroyed in the previous year other than the previous year in which it is first brought into use. The first condition is assessee must follow the straight line method of depreciation. Okay. The second condition is the asset must be sold or discarded or demolished or destroyed in the previous year. Are you getting the point? Other than the previous year in which it is first brought into use. If it is sold, discarded, demolished, destroyed in the previous year in which it is first brought into use, it means in the year of acquisition, it means in the year of put to use, first put to use, then there will be no balancing charges at terminal depreciation. The terminal depreciation balancing charges can be when terminal depreciation and balancing charges can be arises only if the asset is sold, discarded, demolished, destroyed in the previous year other than the previous year in which it is bought and put to use first. Loss on transfer of such asset is treated as terminal depreciation. Profit on transfer of such asset to the maximum of accumulated depreciation shall be treated as balancing charges. Okay, write down the notes. Terminal depreciation and balancing charges. This provision is applicable to the assessee engaged in generation and distribution of power. In simple word, it is power sector units. In simple word, it is power sector units. The assessee must follow SLM, straight line method of depreciation. In other words, if the assessee follows a choose WDV, then this section, this provision is not applicable. The asset must be sold, discarded, demolished, destroyed during the previous year. Other than first year. Other than first year. So WDV minus sale proceed. WDV of asset minus sale proceed. Apply this formula. WDV of asset minus sale proceed. If result is positive, the balance will be called as terminal depreciation. If the result is negative, it means sale proceed greater than WDV. When the result will be negative? When the result will be negative? When sale proceed is greater than WDV. When result will be positive? WDV greater than sale proceed. So if sale proceed greater than WDV, then sale proceed minus actual cost. Okay, if the result is negative, it means selling price greater than WDV. In that case, the result will be balancing charges. In that case, the result will be balancing charges. Remember that if selling price exceed original cost, remember that if selling price exceed original cost, then excess of selling price over original cost will be STCG, short term capital gain. What will be short term capital gain? If selling price exceed original cost, then the excess of selling price over original cost will be short term capital gain. Suppose selling price 150, original cost 100, WDV 70. So in that case, STCG will be 50. Yes or no? Yes. The balance will be $30 balancing charge. 30 will be balancing charge, 50 will be STCG. 30 will be balancing charge, 50 will be STCG. Sir, how to get 30? No. Selling price 150, original cost 100. The excess of selling price over original cost will be 50. Yes or no? Yes. Now 70 will be compared with 100. Alternatively, you can calculate that SP minus WDV, SP 150, WDV 70 comes to 80. Out of 80, 50 will be STCG, so balance 30 will be balancing charges. Balance 30 will be balancing charges. You can read the provision here. Terminal depreciation will be WDV minus sale value. If there is profit on transfer, it means selling price minus WDV. To the maximum of accumulated depreciation, balance will be treated as, to the maximum of accumulated depreciation shall be treated as balancing charges. The difference between sale price and actual cost shall be treated as capital gain. Illustration 4. Kindly read illustration 4 carefully. Kindly read illustration 4 carefully. Important Limited is a power generating unit. On 1st April 2019, it purchased a plant of 50 lakh, eligible for depreciation at the rate of 15% on SLM. Compute balance charges or terminal depreciation, assuming the plant is sold on 21st April 2021. Sell price 7 lakh 50, sell price 30 lakh, sell price 40 lakh, sell price 55 lakh. Original cost is 50 lakh. Yes or no? Yes. Particular amount, case 1, 2, 3, 4. First, you have to calculate WDV on 1st April 2021. We have to compute terminal depreciation as on 21st April 21. It means 21-22 previous year. Yes or no? So you have to compute WDV on as on first date of the previous year, that is 1st April 2021. First we have to compute WDV on 1st April 2021. Here is a calculation of WDV on 1st April 2021. Here is calculation of WDV as on 1st April 2021. Original cost 50 lakh. Depreciation for the year 19-20 will be deducted first. 7,50,000. 15% SLM. 7,50,000. So WDV on 1st April 2020, 42,50,000. Again we have to deduct the depreciation for the year 2021. That is also 7,50,000. That is also 7,50,000 because 15% of SLM. Each year depreciation will be equal amount. So this is WDV on 1st April 2021. This is WDV on 1st April 2021. So here is WDV on 1st April 2021. 35 lakh, 35 lakh, 35 lakh, 35 lakh. Less sale proceed. For case A it is 7,50,000, for case B it is 30, for case C it is 45, for case D it is 55. So 35 lakh minus 7 lakh 50, 27 lakh 50,000. It will be terminal depreciation. It will be terminal depreciation. Next 35 lakh minus 30 lakh 5 lakh. It will be terminal depreciation 5 lakh. Next 35 lakh minus 45 lakh 10 lakh. 10 lakh will be balancing charges. Remember that in case C, sale proceed is 45 lakh but original cost is 50 lakh. Here original cost, here sale proceed does not exceed original cost. Yes or no? Yes. But in case D, your sale proceed is 55 lakh. Actual cost is 50 lakh. So excess of sale proceed over actual cost is 5 lakh. So 5 lakh will be short-term capital gain. Yes or no? Yes. Now the difference between 35 and 55, that is 20 lakh. So out of 20 lakh, 5 lakh is the short-term capital gain. So 15 lakh will be balancing charges. 15 lakh will be balancing charges. You can understand self this example.